talking cycles, right? Where,
Completely.
right after COVID, good news was exceptionally good news, and the markets were ripping. But we're so late in the cycle now that good news is bad news at this point, and that's telling us that we're close to the end or a bigger move to the downside.
It's just, here's the key thing. I look at the lessons of Irving Fisher. He famously in 1929 said, we've reached a permanently high plateau. And then he wrote the book about the Great Depression. I plan on, I don't know, I want to be able to write a book about this period, but I plan on being the right side of the trade. And by being on the right side of trade, you have to recognize the cycle. And so for a while, it was I've been pointing out the stock market's expensive forever. Cryptos or Bitcoin was a great place to get that alpha. And then it became gold. Now those are all expended. And to me, now it's just, this is a silly stage. And it's expended in silver. Silver is just so silly expensive that I'm really concerned about. It's great trading environment. I'm worried about the pain it's going to cause your average person who bought into that euphoria from ETFs and cryptos last year, who realized they were selling, they were buying from the OGs who were saying, thank you very much.
So I want to show this chart here. So this is a Bitcoin, obviously, daily chart. And one of the things I'm monitoring here is this, again, is a classic bear flag formation, right? Bearish consolidation. And you could see just in the last couple of days, we've kind of teased a breakdown on this. And according to charts, and this is where I actually think we're headed, is if you look again, and we talked about this a few weeks ago, if you look at past cycles, when Bitcoin falls, it seems to go and retest and pierce the previous cycle high, right? And so it kind of makes sense where if we bring this all the way back, that brings us back to this kind of high of 69,000. And also you have this sort of pattern. I don't know how many of you guys out there watching know technical analysis, but this is also what we would call a head and shoulders pattern forming. And so this is a little bit of an ominous sign. I also think the fact that, Bitcoin still doesn't seem to know what it is. It's this would have been these last couple of days, a perfect time for it to rip higher with gold, right? With the uncertainty, with being a digital gold. And it didn't. It frankly sold off, which again, it kind of says, okay, is it a safe haven or is it a risk asset? And it kind of leaned more towards the risk asset. But then stocks are bouncing back, and it's barely bouncing back. And that's at least for me an indicator, relative weakness, telling us, again, you're probably headed lower. Now, I will throw this out to Scott because I'm curious about this. I love market timing. Not that I time it very well very often, but the thought process for me is buy weakness in crypto until the second half, third quarter, the beginning of the third quarter, buy crypto. And the thought is that he's got to woo those crypto voters back for the midterms. And that 3 month prior could be the time to play for a big move up with some positive news. What do you think?
I mean, I keep saying and keep being wrong, although it's just a theory, but you'd want to crash the markets now. Right? Like the sooner the better, because people have such goldfish memories. If you crash the market now and then we go up to the levels we're at currently now, they'll talk about what a bull market it was, ripping off the lows, right? So it could be the same price and you'll have a completely different sentiment. So I do think that from a political perspective, the market has to be good in August, September, and October, and is utterly forgettable now. So they could let the bottom come out if it's something that's manipulated. I don't know. It's just a theory and an idea. The same chart that you kind of brought up there with the bear flag also has Bitcoin breaking the 50 MA again after finally getting above and breaking below and kind of retesting that as resistance too. So I can't say it looks good, but I also can't say I'm so convinced that there's even enough volume to give the chart patterns much confidence right now. You really want to see when you break down, you want to see a big volume move. At head and shoulders, you showed you want to see huge volume in the head and on the breakdown. So just not seeing it to me. So to me, I just kind of default back to gross, ugly chop.
So think about that. I think that's very profound, Scott. Just think if we could get that 10% correction in the stock market out of the way, maybe even 20%, stay down a while. Bond yields or 10-year note yields right now, 4.25, they would drop to 3.25, I think. Fed would ease probably 2 or 3 times. If we go down and stay down, all over the place. Average price of gasoline right around $2.80, drop to $2. Trump could be all over that. Crude oil at 59 now would drop to 40 and change. Those aren't profound levels. They're just normal. That's the key thing I've been pointing out for a while. He doesn't get that yet. It's like he didn't understand, Trump 1.0 did not understand crypto dollars or investing in treasuries. I'm like, how could you not like this space? Now he figured that out, helped him get elected. this to me is going to be one of those key things he's just not understanding. And we pointed out a little thing he didn't get in soybeans a little while, got a nice trade out of that. But to me, that's so important. And I just look at it, I see that 180-day volatility now at 11%. The average is 19% since 2019. We always mean revert, and just a question of when. And I see, look for opportunities. Don't buy risk assets on the way up. Maybe if you get some decent dips, and we haven't had decent dips yet, maybe a little bit in natural gas, but it's hard to trade. We've only had decent opportunities, I think, so far, in the little dip in the price of bonds and the rally in copper and crude to be responsive.
Let's switch directions now to the metals. So we have gold, new all-time highs today, just continuing. And I mean, to me, it just looks like it's destined to hit that 5,000 level, which is basically the upper portion of this parallel right here. Again, you know, is this a momentum trade, do you guys think? Like, I mean, obviously it started out as a safe haven, but the question is, at what point does it just become a hysteria? And the same thing for silver, right? I mean, silver is at all-time highs today, nearing 100. What would you say, Scott?
It is a hysteria. And now, that doesn't mean that the markets can't stay irrational longer than you can remain solvent. I mean, that hysteria can double from here. I'm not trying to call it the top, but man, there's nothing fundamental now pushing the price of silver. Come on. I love when people come on, like Mike, we had this conversation, you know, Dave, like, it's an industrial metal and usage is rising. Give me a break, dude. It's silver. Like the industrial applications of silver haven't sent it on a Ford 5X in a matter of months.
So silver was just, I mean, the precious metals were my main focus for almost 5 years. And the stuff I hear people saying in silver, I said that same stuff 15 years ago. I know people this week, I've spoken to long-term investors, are selling precious metals, gold and silver, for the first time in almost 2 decades, saying thank you very much. I mean, silver is, and certainly things like platinum, just been stuck in a dead rut for a while. And finally they break out. Thank you very much. But don't underestimate what always happens. Silver is probably get to $100 an ounce. Gold potentially, obviously, probably get to $5,000 an ounce. And this year is very similar to what 79 and 80 put in peaks, both of them, for years. Don't underestimate. It's my point is, everybody gets the fundamentals. These are things that Scott and you and me, we've talked about years ago. It's all kicked in, most notably gold. What happens though is you shift those supply-demand balances, you shift everything when prices move. It's the most volatile, significant part of a model. And that's the key thing to think about now. I think it's an area that I just look at how frightening it is. To me, the signal here is to be lightening up on some of those very expensive precious metals, as I showed, and buying and looking at the attraction of a 5% long bond. That's the key thing. If you stay above 5%, guaranteed for 30 years, there's always issues. But that's major competition for any other market, particularly gold.
So a couple things. So number one, I could guarantee people watching this are saying, but guys, this time is different.
Of course, exactly. Right? Not with my money. The irrational investor is saying, not with my money. Thank you. It was different for 10 years. So here's a little story. For 2 years in a row, I went to metals conferences here in Miami. This was before last year. And the theme was every year is, why aren't the miners breaking out? Why aren't the miners breaking out? There's that GDX index. It's the Van Nix Miners Index. It's the main one in metals. It was stuck unchanged for 10 years. And it finally breaks out and gives you a 2x, 3x last year. See how it was just done doing nothing. Yep. And so that's where so it hits the mainstream. People buy. So by the way, does this feel like cryptos about this time last year?
Yeah. I was in the office where I have my traders. You know, we were commenting that the same sort of comments on YouTube videos that we saw with altcoins. God forbid we said anything like in 2021 against an altcoin. The same things are now being said about silver. And again, as a psychological indicator, and again, like you said, timing the top is almost nearly impossible. We're so close to 100, maybe it goes and pierces 100, but just looking at those type of things, it does make you nervous. If you've been around for more than 5 years as a trader, if you go back to trading some of the major bubbles, the .com bubble, bubbles in crypto, it's very similar to that type of mentality. So I think that's a wise words. The other thing I would just say, Mike, you said, you know, if you were talking and saying things to do, you would buy a 5-year, 5% paying treasury. First thing that jumped in my head is that Show me one person out there that's going to be happy with 5% return
Exactly.
in their
I love
portfolio.
it. So that's the key thing. That's I'm only 61. I get it. I'm a major student of history, but it's the psychology of my colleague who's like 20 years younger than me. I mentioned that the other day. He goes, well, I'm going to miss out because he's never seen that environment. And 2008-9 happened when he wasn't really invested. Again, that was just me protecting my family back then, shorting the market and help protect some of the plunge in the value of my home. But this is just a cycle that's kicking in. And the key thing that emboldens me to say this is gold. When the rock grabs alpha, heed the warning. I'd love to be able to look back from the future and say that rally to what we've done so far didn't matter. And I doubt that's going to happen. So that's why I say stay defensive. Well, prove me wrong. Like I said, prove me, like make copper. Copper gave us a great pop above $6 a pound, 13,000 a ton, and now it's heading back lower. To me, that's a prudent thing. Okay, test a short there. Bitcoin gave us that run up to near 100,000. Test that short. Prove me wrong in these shorts. Prove my theory wrong, because if those shorts start kicking in, the dominoes tumble. That's why I view this is a prudent year, like I view 2008, to be short the equity market. Except that's picking a top, and that hasn't happened yet. I'm looking at markets already potentially peaked. It gave us a chance to sell and rolling over.
That keeping it very simple. We've been rallying, and if you're struggling to make money right now, if you had simply dropped $100,000 or $5,000 into the QQQ at the beginning of 2023 or the tail end of 2022, you would have 3x'd your money. The SPY, 100,000 into the SPY, you had $306,000. 5,000, you now have $15,000. Most people are over trading. I love to tell that story. I also love to, I told it today to Money Mike's son. Him and I and Mike were chatting after the live this morning. And, I told him the story of Tesla. I said, in 2012, if you had dropped 58,000, instead of buying the Model Y, you put 58,000 into Tesla, you'd have 16.1 million, Larry.
Yep.
So, don't get too discouraged, but some of you are over trading. Some of you are not investing. Some of you aren't following our trades. Let me, and this is nothing I'm saying is a suggestion for you should buy, sell, or hold. Let's go look at Meta real quick.
Yes.
So first of all, I called this buy back here, right on the bottom of this channel. And I predicted that we would run up and hit 670. And we literally ran up. And then right when we hit 670, I said, it's time to sell, guys, and get out. Now, after that, not too long ago, when we got right here, we had been moving sideways between these two prices. On that day, I called it the devil's 666 or 648. I said, whichever direction it breaks next is the direction it's going to choose, and it's the direction it's going to run with some strength. Well, it turned out to be the 648 direction, and I said, from this point forward, puts down. Now, specifically, right here, I did a show, and I called puts again, saying that the down move wasn't over. Now, the next 2 days, it ticked up a little bit. Folks were panicking, not holding the trade. And of course, we dumped. My target was 602. You can see that we hit 602. Yesterday, when we were sitting on this red candle, no sign of recovery, I said, I'm getting into some calls. Tomorrow's going to be a good day. We went from 602 to 617. Okay. Now, personally, I'm still leaning, I think that before you scale, this is the area that I kind of expected it to bounce. But let me give you an update on Meta. So you see, I've got this descending channel, okay? This channel, it's worked, it's accurate, it's got multiple touches that it's respected. So I've got another descending historical line there. So to get bullish on Meta beyond that bounce, we've got to get above the middle of the channel. I've always said top of the channel belongs to the bulls, bottom of the channel belongs to the bears. Right now, we're still in the bottom of the channel. So I'm expecting that we will hit 617 again. Tomorrow, we have to close above 617. Otherwise, the risk actually remains on for the bears. So I'm looking for another pop-up in the morning, but then we're going to have to see whether or not we close above 617 and can hold it by going into close. That's your exact Meta plan. And I wanted to give you really quickly Oklo. Larry talked about it a moment ago. I see a potential inverse head and shoulders pattern. And I see the last time we got this candle, that doji candle, on a pullback, not at the top. If it was at the top, we'd be scared. On a pullback, it kind of looks attractive. The last time we got that right here, we ripped. But what I really want to show you guys, and I know we're going through things quickly, is I want to show you the Fibonacci. So this is this was the impulse move. We know that because after it had pulled back and made a new a higher low right there, it then broke above this structure. So that's what qualifies it as an impulse move. When it ran all the way up, the very first spot, if Oklo was going to be a hot stock, the very first spot that it had to bounce on is the 0.382. That's a shallow pullback. Well, we came down, we bounced, we came down. This was a little bit of a bear trap, right? This push right below this level, but then we've ripped. So we're looking right now for this head and shoulders pattern to play out and for a move to get above 112. And that would technically tell me, Larry, that we have the potential of going all the way back to 200 on Oklo. You know, fundamentals of the company stink. Let me put, there are no real fundamentals. It's just tied into the AI trade, tied into Sam Altman, tied into Trump being an investor in Oklo and nuclear.
And Meta.
Yes.
Meta did a deal. The fundamentals with this is actually Meta did a deal with Oklo because remember, every time we get on, I say AI has to be powered, right? I want you to listen to the president today in Davos. And I want you to understand that the very second he said, he talked about windmills being bad, birds, there are dead birds everywhere. And so when he talked about, that's my best Donald Trump. And then he talked about nuclear. He's getting the nuclear reactors back online, which he knows that has time. Meanwhile, he gave a credit, a couple of like $10 million to Oklo. People just kind of glazed over that. And so it was a $10 million grant that he gave, and Oklo was one of the recipients of that. And then he says, I am going to be really pushing nuclear energy. The second he said that, Oklo pumped 11%. Again, it was the dog that ran out of the gate too soon, showing you I'm going to be a runner if this takes off. Now, I'm not telling you what to buy, sell, or hold, but this is where I am good at. I find these things and I see the dogs getting ready to run, right? And Oklo is one to keep your eye on. We made 508% on Oklo.
Yeah, I know it.
Okay. And so now, and it was overinflated. We sold at the top. Now we're trying to see where it is right now.